Well, people have been warning for quite some time that there could be a potential currency war between the United States and China, but it is looking like this currency war is spreading throughout Asia. We're shaping up to have a world currency war, not just a currency war between the U.S. and China. Now, this all started this week, I guess, or this past week. It's all blending together, when the president decided to impose some more tariffs on China, some additional tariffs of 10% on I guess everything else that he hadn't tariffed already coming out of China. And the Chinese responded quite swiftly with, of course, calling off their agreement to buy more U.S. agricultural goods such as soybeans, and also they decided to stop supporting their currency in the foreign exchange markets. Now, for those of you unfamiliar, the Chinese for quite some time have essentially set up a Maginot Line at the level of 7 in terms of yuan to the dollar, meaning that they would not let the yuan trade at any level greater than 7 yuan to $1. And of course, anything above 7 yuan to $1 is weaker because, the yuan is worth less in terms of dollars in that case. So, if, for example, if the exchange rate is 8 yuan to $1, well, then the yuan is weaker because it takes more yuan to buy $1. And so, in a pretty unprecedented move, the Chinese have allowed the yuan to devalue in the foreign exchange markets quite a bit this week. And, of course, in response to that, President Trump and the U.S. Treasury Department, led by Steve Mnuchin, labeled China a currency manipulator. Which is very ironic because they're upset at China for not manipulating their currency in this case. China apparently wasn't a currency manipulator when China was fixing the price of the yuan at 7 to $1. In fact, China is still, fixing the price of the yuan up. But not as much. They're not working as hard to keep the price of the yuan up, so it is beginning to slip. The Chinese are letting some market forces actually impact the value of their currency. So it is completely preposterous for the U.S. to now label them a currency manipulator. They are manipulating their currency a bit less, though still to a great extent. The only reason why the Chinese are being labeled currency manipulators are because they're allowing their currency to fluctuate in the wrong direction. For some reason, the President of the United States wants the yuan to rise against the dollar. Trump somehow feels that if the yuan is falling, well, that's terrible because now Chinese-made goods are cheaper for Americans, and Americans can buy more stuff with less money. And that, of course, is terrible because we never want the cost of living to go down in America. It must always rise. It's been rising for over 100 years, unlike, say, in the 19th century when things were pretty great and the cost of living fell every year. No, we can't have that anymore because that would be terrible for the economy because nominal GDP would fall. Now, of course, the real reason why the president wants the Chinese currency to stop going down and to stop getting cheaper so that Americans can afford to buy more Chinese-made goods with less money is because he wants people to buy more things that are made in America, including people in China. And, of course, if the Chinese currency is falling, then people in China cannot afford as much American goods. The price of American goods are rising because now the Chinese cannot buy as many dollars in terms of yuan. So, in a perverse way, the President of the United States is far more concerned about the Chinese consumer than he is the American consumer. And that's because he's really only looking at things through a producer's perspective. He sees, well, if the Chinese people can afford to buy more American goods, that's bad for Chinese manufacturers and good for American manufacturers. Well, I mean, the fact of the matter is that not everyone in a country is involved in export industries. That is, it's always going to be a minority of people who are involved in export industries, but 100% of your citizens in any country are consumers. So it's always better, at least in my opinion, to help out consumers and not try and do these dirty tricks to benefit a small segment of producers. Now, if the president was upset that the yuan has been devalued against the dollar, well, then he's going to be very upset. I'm sure he was, because he's already read the news, I'm certain, this morning, when he found out that not only New Zealand, but also India and Thailand cut their interest rates at their central bank, devaluing their currency against the dollar more than economists had expected in all three cases. The New Zealand central bank ended up cutting by 50 basis points, which, if you may remember, that's a pretty significant number. That's how much Ben Bernanke cut back in 2008 in America as we were going into the Great Recession. And of course, that's how much Trump probably would have preferred that the Fed cut in July, but the Fed only cut 25 basis points. However, the New Zealand Central Bank was also expected to cut 25 basis points, but they shocked the markets by cutting 50. And why did they do that, you may ask? Well, it's because they're scared. They're scared that we're going into a global recession, because we are. They want to cut interest rates to try and stimulate investment in their economy, to try and pump some life, to get sort of a dead cat bounce. But the effect of this action in the international exchange markets is that the New Zealand dollar has been devalued against the U.S. dollar. And so the dollar is getting stronger, just as President Trump was hoping that it could get weaker and weaker. It was already bad enough for the president that the Fed didn't cut as much as he wanted, but now, because all these other central banks are cutting more than the Fed did, the dollar's just going to keep going up. Even though the Fed's cutting, everyone else is cutting more, so the dollar's getting relatively stronger. And of course, similar cases in Thailand and India. Thailand wasn't really expected to cut at all, I don't think, and they cut by 25 basis points. And then India cut by a very odd number of 35 basis points. So, it's kind of funny. They're trying to go in between 25 and 50 so that they didn't pick either of them. I guess they were too scared to go 50 because they thought that would be too dovish, but they didn't think 25 could really get done what they were doing. It's ridiculous, the psychological games that central bankers try to play, but that's a story for another video. So as you might imagine, the president was quite irate, it would seem, when he woke up this morning to discover all this news, and he has said now that the Fed needs to cut bigger and faster than they had planned to, which they probably will after this. I think it's clear to most people now that whatever foolish goals the Fed had in mind when they cut interest rates by 25 basis points are pretty much unattainable now, and that they did not cut enough from the perspective of people who want to cut. Now, of course, in my opinion, I think that they're fools for cutting. Nevertheless, that is what conventional wisdom dictates these days. And, of course, every central bank, not just the Fed, is expected to cut more by the end of the year. I believe that the Philippine central bank has said that they think that 50 basis points by the end of the year is quite likely. So it'll be very interesting to see how markets respond to the world currency war. I wonder if the sell-off from last week will resume and intensify after a couple days rest. So if you gained anything of value out of this video, I'd appreciate you clicking that like button and subscribing. And if you do subscribe, please do click the bell because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.